This is David from Team Power School Banker. Thank you so much for joining us here today. It is Tuesday night. It's a little after 5, normally 5 o'clock on our episode starting. My apologies for the technical difficulties we've been having here tonight, but we are back on and live. I have Vladimir Lopez from Guaranteed Rate, a phenomenal person, great guy, very knowledgeable in the mortgage industry on every level. And we have many things to talk about today. The reason why we brought back Jose here today is because he has a couple elements that most mortgage brokers don't have. One, he speaks Spanish. And we have lots of Spanish clientele that we really want to make sure that they know they have someone they can trust and go to and be available to them for all their needs and wants. Number two, we want to make sure that they know that this guy has something special to talk about. It's called the ITIN program. We're going to get into that in 2 seconds. First, a little about Jose. 18 years in the business.
Yes, sir.
That's a long time. 18 years. The mortgage market has changed tremendously. And you've seen a lot of ups and downs.
I have.
And ups.
Yep, 18 years. When I started in the business, I had hair. But I lost it all because of how stressful the business is. But a lot has changed since I started. I started back in 2004.
Wow.
And I went through the crash of 2008. And as we all know, lending mortgage companies had a lot to do with that mess that happened. And since then, what has changed is that lending regulations have become tighter. Borrowers have to show their capacity to be able to actually afford a mortgage if they want to get a home. And that's where we are right now. The people that we are approving, they qualify for a property, they get paid, and that's how the business has changed.
It's a matter of fact you mentioned that. So I got in the business in 2005, just so you know. So I'm a little behind you, but I'll tell you that, both of us have seen what that craziness was. And before they can get a mortgage with it, basically they scratched the name on a piece of paper and nobody checked anything out. Now they check you out upside down, inside out, left and right. And it's hard for a buyer today because when you're getting scrutinized by the banks because they're borrowing 1, 2, 3, 4, up to $1 million or more, whatever they're borrowing. And they should know that it's expected of somebody to want to make sure that they can actually qualify to buy a mortgage.
Correct. And that's very true. And I got to tell you just a little, full disclosure. I came into the business and I never, I don't know if I should say unfortunately, I never really was able to play with those exotic lending programs because I was too new. The no income, no asset, the ninja programs, as they were called, no income, no asset verification programs. So I never was able to actually play with them or guide anybody to get them. I was primarily a first-time home buyer loan officer when I started my career in Delaware.
Wow.
And that's what I did. I was doing the first-time home buyer program in Delaware, and that was my focus. So really, I never had a chance to play with them. But I could see that I was able to see during my career the damage that those kind of programs create.
The writing was on the wall. Yeah. You knew it. You saw it. It's good. The reason why the fact that you didn't get into those programs was why you're here today, actually, because a lot of people who are in those programs are no longer existing.
I appreciate that. Thank you for saying that.
Absolutely. Yeah. So let's talk about exactly what this means. So there's a program that Guaranteed Rate has now introduced to the lending industry. And Jose is the one you want to speak to about this. This is kind of a new thing for all of us. And something you want to learn about. What does ITIN mean? It's the Individual Tax Identification Number Loan Program. What does that mean? Jose, tell us a little about this program. Give me some.
Thanks, Dave.
Yes.
Basically, the ITIN or Tax ID loan program, it is a program that is designed for borrowers who are not yet fully legal in the country and they don't have a social security number, which is traditionally required to qualify for a mortgage lending program. However, these borrowers are paying taxes on a regular basis using this tax ID, which was provided to them by the federal government, the IRS. And so the fact that they have been filing taxes, hopefully for at least over 2 years, using this document and this tax ID, and they are in a way legal in the country because they're here paying taxes, they are allowed to participate on this niche program. All lending programs require that an applicant have a social security number. Those are Fannie Mae, Freddie Mac, FHA, all of your lending programs, including your first-time home buyer programs. They require that the applicant have a social security number. But this program was designed for those consumers who do not have a social security yet. However, they have been employed in the country and they have been paying their taxes, and this program was designed for it. It is a niche program.
I will say in advance that as an agent who's been working this business 16 years, how many times in the past I've had clients who are in this country here who are hardworking people, hardworking 40, 50, 60 hours a week, paying taxes, and they couldn't get a mortgage. And it was something where they're in the process of trying to go through the process, and they have a family, they have kids, and they really want to buy a house. And it means a lot to me to know that they actually have the ability now to get a mortgage and have the American dream. They're not crying on camera here. Like, that's a big thing, to have the American dream. When I have clients that are from all over the world, all over the country, that have family coming in, they get here, they get themselves a job, they work 40, 50, 60 hours, literally.
Yep.
And now they have an opportunity to actually get a mortgage and own a home. That's pretty impressive stuff.
I think I love, David, what you said. The key word is the opportunity, and the guaranteed rate Affinity is definitely providing that opportunity. That doesn't mean everybody's going to qualify, obviously, but at least the program is there that can potentially help those who have filed taxes with their tax ID number.
All right, so let's talk about some things that someone needs in order to get qualified for a mortgage, okay? Just looking at this piece of paper in front of me as I'm watching and talking with you guys over here live. Again, just before we start going into this, please, if you have not already, go to our YouTube station, Team Powerhouse Real Estate. Hit subscribe. By doing so, you're going to be in the element of a chance to win a beautiful tumbler by Team Powerhouse, which I'm very excited to share with you today. And of course, our friend over here got to have one as our special guest. Cheers.
Team Powerhouse.
So you have now the YouTube channel. You also have Instagram, Team Powerhouse. Go on to our Instagram page. Please subscribe. Please follow us, if you will. Go to our Facebook page. Please follow us on Team Powerhouse. Say Dave Lamel, I want to be your friend. Friend me on Facebook. By the way, every time you add another place to subscribe to or follow us, you get one more ticket inside the spinning wheel to win a free tumbler. And we appreciate your support so much. All right, going back into the program and what's involved over here, we need to have a buyer that has to have 2 years W-2 tax forms with tax ID to match the federal taxes, right?
That is correct.
Very important, right?
Yeah,
it's not so simple. You have to have 2 years of work.
That is correct.
Okay.
So I would say let's start with what is the foundation for a lending program and what lenders are looking for. So a mortgage company is looking for, the basic foundation is to have someone who has been working for a company for at least for the past 2 years, continuous work, right? And that they have filed taxes on that income, and that they have means to document where the income is coming from. So cash money is just
under the table.
No under the table.
Everything's got to be documented in a
Exactly.
bank account so you can see where the money's coming from.
Exactly. So with that in mind, then yes, for the tax ID program, it will be exactly the same basic parameters. We will need a 2-year federal tax returns to prove that this applicant has filed taxes. If there are W-2 employees, then we will need copies of the W-2s. If they happen to be self-employed, then we will obviously need those documents for self-employment, which would be business tax returns to be able to document the income.
Self-employed buyers. Now, the fact that you're self-employed, you could be an American citizen, self-employed. You can be from another country, in this country, self-employed.
Yeah.
2 years.
2 years, absolutely.
Make sure you have an accountant.
Minimum.
If you don't have an accountant, it's going to make this process very difficult because why?
It's best to have a legitimate third party, because the lender, we as lenders, we have to document and verify and be able to verify that you are truly self-employed. So it has to be done by a third party, and nothing best than an accountant, someone who is legitimate, right?
Right.
Someone who's licensed.
Yes.
Someone an accountant. So it's someone who's bringing validity to your documentation. So if you're someone who likes to do your taxes by yourself all the time because you want to save money and all that good stuff, power to you. I hear you. But I recommend to you to please talk to an accountant.
Get an accountant.
Because an accountant brings a sense of validity that it is required, especially with special programs like this.
If you want to buy a house and you are not an American citizen yet and you're working 2 years, get yourself an accountant. Yep. Make sure everything's on paper the right way. Make your job easier and give yourself a better chance to get that mortgage.
Absolutely.
Let's talk about identification. What kind of identification do you need to have in order to get a mortgage?
Thank you. That's a good question. So the program requires that the applicant shows a state issue ID. And they also have to provide a copy of their ID from their country of origin. Most of the time, that probably would be for the country of origin. More than likely, that would be a passport. And as far as the state ID is concerned, it will be basically a state ID. In Connecticut, You don't have to be a citizen to get a state issue ID. It is not a driver's license. I understand it's not per se a driver's license, but it is a document that allows you or shows that you are in the state and that you're allowed to be here.
So you're not somebody that's hiding.
Right.
You're not under the mattress. You're not hiding in closets. You're not hiding behind wall. You are out there saying, here I am, who I am. You have identification, whether you're driving and a driver's license, you have an ID, who you are.
Correct.
Someone finds you, they know who you are. It's important to know who you are in this days and age, because especially if you're going to buy a house, you need to have identification, who you are to buy a house. All right. In this loan process, by the way, if anybody has any questions while we're here with Jose, this is a very detailed, very sensitive, very in-depth kind of opportunity for a buyer to get a mortgage in this process. Again, so is this something where it's no money down? How much money you have to put down in a 5%, 3%? What? Because I mean, typically a first-time buyer, their fund situation may be less, but because this program is so specific, you really need to show that you've got some money in the game.
Absolutely, very good question. This program is a very niche program. What that means is that this is a program that is actually not purchased by any of the traditional lending avenues. It will not be purchased by Fannie Mae or Freddie Mac or Ginnie Mae, which is an FHA program.
Yeah.
So it's not going to be purchased by any of them. So this means that this is a portfolio product. The lender who's providing this has to make sure that they're taking a huge risk. And because of that, the down payment on this program can range anywhere from 20 to 25%, or even higher, based on the credit score of the applicant.
Debt to income and credit, right? Those are the three pieces of the
Debt to
puzzle
income and
always.
credit, always, absolutely.
So let's talk about that. Sure. What kind of credit scores are we looking for a buyer to get a mortgage?
Sure.
Going with ITIN program? It used to be called something like a stated mortgage. Is that similar?
Stated income?
Is that something?
This is not
at all. Okay.
No, in this case, the lender has to do their due diligence that the applicant is able to actually afford that mortgage.
So they're actually showing.
They have to show
that.
And that's why we ask for the 2 years of tax returns, pay stubs if they get paid with pay stubs, or 1099 if they are self-employed and they get 1099 income.
That's important. 1099, yes.
Exactly. So they have to provide that for the past 2 years minimum, right? Because we have to verify that, in fact, this applicant is able to show the income and they're able to afford the mortgage that they're asking for.
So what you're saying is they could actually become a real estate agent, right?
Yes.
They could become a real estate agent, get a real estate license, because we're 1099.
Absolutely.
Right?
Yes.
1099 employees, by the way, which
Absolutely.
is good and bad, but you could come to this country, become a realtor, right? And then apply for this program as well after 2 years of income, right?
Absolutely.
Making sure you have a good accountant.
Get your tax ID, have a good accountant. Absolutely. You can definitely
and have a great mortgage broker to work with in this program.
Absolutely.
So what kind of credit score do you need to have?
The minimum credit score for this program is 640.
Wow, that's actually really low.
It's
That's very reasonable.
It is reasonable.
I think if you don't have a 640 today, you need to really make sure you're talking to Jose
Absolutely.
to help you build that credit up. So let's start with that.
640 is definitely the bottom, very minimum that the program will accept. But of course, that comes, remember, so for your listeners out there, credit score is a reflection of risk, right? So the lower the credit score, the riskier the person is. The higher the credit score, the less riskier, the better the consumer will look to a lender. So if you start the process with a credit score of 640, you are essentially showing the lender that you're kind of risky, and that risk is going to be reflected on the interest rate.
At 640, they probably had some issues in the past with not paying a bill on time.
Correct. And then we'll have to address those things. It would be a good idea.
One of the important things is before you actually can buy a house, most people, when they actually call about buying a house, and I put them in touch with you, what's going to happen is you're going to look at their credit, and there's probably going to be some dings on their credit.
Right.
And what you're going to do is when you're looking to buy a house, you're going to speak to Jose, and what's going to happen, he's going to help you build that credit back up by looking at your back and your history and help you build that credit up so you can get to that minimum of 640 to be in this program, right? And maybe even higher. And the higher your credit is, the better chances of not only qualifying for this mortgage, that income credit.
Dave is giving me a lot of credit that I don't deserve. Okay, just like a little disclosure, full disclosure here. I won't be able to help you build your credit, but I will guide you on what you need to do. It is up to you to make your credit decisions and how you manage your credit and how you pay your credit. Obviously, I will give you some direction on what to do. I do have a very good solid plan.
Pay the bill.
Pay the bill, exactly. It's right.
Pay on time.
Pay the bill, pay on time. And you probably hear that all the time, but it is true. It is just as simple as that. And also managing your debt, meaning don't max out your credit cards. That's a big no-no. Even though you're paying your bills on time, but your credit cards are maxed out, that goes against you. It is considered like you're driving on a highway, trying to go a fast speed, but at the same time you're stepping on the brakes. So you're stepping on the gas and stepping on the brakes at the same time, and that's pretty much what it is when you have high balance on your credit, and even though you're paying on time.
Let's touch on that for a second.
Sure,
You brought a good
sure.
point up. So a lot of times people have 1, 2, 3, 4 credit cards, right? You have a department store, you have a Visa, you have a MasterCard, you have a Best Buy, whatever you have. And each credit has a limit on it. So let's say each credit has $1,000 limit, and you have 4 different credit cards. The bank typically, and you correct me if I'm wrong here, doesn't like to see more than 30% roughly on a credit card balance
That is correct.
per month. So you have 4,000. That means each one is 300 times 4, $1,200 max debt on the 4
Correct.
credit cards, right? You keep that balance low and paying them off,
That is
your
correct.
credit will go up, showing you're well paid and on a regular
That is
basis, and your credit's going to be much higher.
That is correct. And that is right on the money, Dave. You're correct. Lenders want to see what is called a credit utilization. Sorry, my accent. It's my French accent. Credit utilization rate of 30% or less. So it's correct. So if you have a credit card with a balance of or a credit limit of $1,000, they want to see you use up to $300 of that. So that's 30%.
And
right?
sometimes you're going to go and spend 5, 6, 7, 800.
Correct.
It's okay once in a while, but then you pay it off.
Pay it off. That's exactly right. You want to keep at least to that threshold of 30% of the available limit, so your credit score is in good shape. Otherwise, if you max out your credit card, even though you pay on time, so if you owe 1,000 or 1,000, even though you're paying on time, your credit score is dragging, it goes down.
Because they're more dangerous of a buyer.
That is
They're
correct.
worried about you, that
That
you're
is
always
correct.
maxing your credit card.
And something else too, please keep in mind, not all credit is created equal. So a charge card from a Kohl's or a Sears is no longer around, but a charge card from Kohl's or
Best Buy.
Right, or Walmart or anything like that is not the same thing as a credit card. So there's different rankings on credit and
That's
which one.
interesting.
So you have to be careful. What is the credit mix that you're bringing into your credit history? And every time you go, especially now, Christmas shopping is coming, right? Christmas season is coming, and everybody's going to give you a discount of 20%, 15% if you open a credit card, a store card.
Stay away
Then
from those credit
stay
cards.
away from that.
The worst credit card
Yeah.
you can pick up is a store
It's
card.
best to have your
Major.
credit
A
cards.
Chase, a MasterCard,
Correct,
a
MasterCard,
Visa,
correct.
American Express,
Correct.
Discover.
It's best.
Right.
It's best to do them. Correct.
Good information, by the way. Very good education on what is involved in credit, building credit, helping the credit to go up and the debt to go down with the ability to get this program in. This is called the ITIN, Individual Tax Identification Number Loan Program. You can Google that, you can look it up, or what you can do, you should call Jose. And Jose's number is going to be flashed on the screen if it hasn't been already by Jonathan over here helping us out to make sure you have his number. Again,
Very good. Yeah.
Jose is in the business 18 years, very knowledgeable, working with Guaranteed Rate, a phenomenal mortgage company
Correct.
who we like to use and recommend to our clients because of the fact that they have many different outlets for mortgages. And on top of that, when you're going to a mortgage broker, you're going to have them shopping all the banks.
Correct.
When a mortgage broker is shopping all the banks, that gives you as a buyer many more options versus going directly to a bank. That's one option.
Correct.
You go to a mortgage broker, they've got 50 banks.
And let me also say that Guaranteed Rate Affinity is not only, we are not just, we are a direct lender. So we're not just a broker. We have broker relationships, but we also sell directly to Fannie Mae, Freddie Mac, and Ginnie Mae. So we sell directly to them, which gives us a lot of leverage because we have a lot of relationships. This is a very interesting topic, and something else I'd like to address, which I think we have not addressed, and it was the amount of money that is required. We talked about that, right?
We didn't really get into how
we
much
didn't
money,
get into
yes.
it. The amount of money that is required for this program is between 20 and 25% of the purchase price. That will be the down payment plus closing costs. That money is very important that you, if you're thinking about that program, that make sure that that money is in the bank. It can be money that you have saved under the mattress. Money under the mattress is like kryptonite for mortgages. So it has to be seasoned in the bank for at least 60 days and make sure that you have enough money to cover your down payment and your closing costs. And the closing costs usually will range, I don't know, if I were to guess, between 4 to 5% of the purchase price, especially for this program is a little bit, there's a few fees in there.
Right.
But yeah.
So this program being a special kind of program,
Right.
the rates are going to be a little higher.
Correct.
But you have the opportunity to buy a house and have the American dream.
That is
Later
correct.
on, guess what you can do? A couple years later, you can refinance.
Absolutely.
You call Jose up and say, hey, you know what? I got my house. It's been a couple of years. My interest rate, let's just say it was 5 or 6%. I don't know what it is at the time, but based on your credit, income, and debt, later on they can refinance into
Absolutely.
a conventional mortgage, go to a 3% or 2% interest rate, depending what kind of mortgage they get,
Very
15-year, 30, etc., depending on the time of the year when things are going on.
That's correct.
And they have an opportunity to get where they want to be.
Yeah. That's
It's a
correct.
step in the right direction versus not an opportunity at all. Let's talk
exactly
about now being self-employed.
Very
Right.
good question.
2 years federal tax returns with, what is
With the
that?
Schedule C's.
Schedule C's.
Correct.
2 years business tax returns or S corps or corps.
Correct.
Can
So I can elaborate on that. If you are let's say, for example, an Uber driver.
Oh, good.
Okay. So if you're an Uber driver,
Uber driver,
you get paid 1099, and you will be filing taxes on your income using Schedule C. If you're doing that, then we will need to see your personal tax returns and the schedules that are attached to them. Now, if you happen to be, let's for example, a restaurateur, you have a restaurant, you own a pizza place or you have a restaurant, you probably more than likely you are either a small corporation or you're incorporated, then we will need to see those business returns.
you know, I have a lot of clients who are owners of restaurants, which I love and appreciate them so much. The hardest working people, I mean, one of the hardest working people
Oh,
I
yeah, it's
know.
a tough business. I
Sweat,
was a bartender, I know.
blood, sweat, and tears all the
All the
time.
time, yeah.
They're out there serving you, the public. By the
For
way,
sure.
make sure you get out to the restaurants. Make sure you're servicing, getting them the business they deserve to have in this industry. We need to make sure we support them.
Please tip your waiters.
And please tip your waiters and waitresses. Make sure they're
bartenders, yes.
well taken care of, of course.
And one more thing before we go with that, with business, if you're self-employed, the program will require 90 days bank statements and profit and loss statements, as well as a balance sheet.
You just got a question.
Yes.
Oh,
So this
I
is.
love
Can you take a wild guess who this question's from?
I'm going to hope it's from Patrick.
Patrick asks, "What is a good credit to have? A car loan or a credit card?"
Excellent.
That's a great-
Actually, a car loan is better than a credit card.
So why is that?
The reason why is because a car loan, you have committed yourself. See, a credit card, if you decide not to pay it,
What are they going to take away from you?
Exactly, what they're going to take away from you. You put an asset on the line, right? So when you put in an asset on the line,
Good
it gives
question.
you more. That's a very good question. It gives you more. There's more oomph to your credit. So if you're curious to know, Patrick, about the ranking between credits and how they work, it goes. So a charge card from the store is lower ranking. Next is a credit card. After that is a car payment. After that is a student loan.
Oh, wow.
Okay, student loan. After that, from a student loan, you're looking at a mortgage. After a student loan, you're looking at a personal loan, and mortgages being the very top.
We just learned something very special by a great question by Patrick Pagano. Pat, thank you so much for being a great person, friend, and somebody who watches our program every week.
That's awesome.
Not only does he watch every week, he also shares the podcast, which is fantastic because he just has a large following as
That's
well.
awesome. Good question.
Really good question. As a matter of fact, I didn't even know the answer to that question, and I learned something new. So you have credit card, then you
A
have
store card.
a store card.
Store card is the lowest.
The lowest, so like a
lowest on the
Walmart
line.
card, a Kohl's,
Correct.
and then you have a regular credit card. Can't
Yep.
talk anymore.
Then car payment.
Then car payment,
Then student loan.
student loans,
Or personal loan, they're both pretty much in the same. A personal loan.
and then a mortgage.
And what I mean by a personal loan is you can go to your bank, and I'll address this to Patrick. You can go to your bank, Patrick, and you can ask, hey, Mr. Banker, it could be, I don't know, Wells Fargo or any other kind of.
Wells Fargo.
or
Just kidding.
savings bank of Danbury or your credit union, for example. You can go to them and say, hey, I'd like to get a personal loan. Can you give me a personal loan for, I don't know, $5,000? And if you get that, you pay it on time, I guarantee you your credit score is going to be up there because that's a significant debt. It's actually very important.
Not just significant debt, but you went to the bank, you put your face in there, and you said, I want to borrow your money and I'm going to pay you back.
And actually, that's one of the techniques I use when I'm guiding folks on how to build their credit. That's one of the techniques I use, and maybe we can discuss about that some other time.
I like that. That's very cool. All right. So listen, we have had an amazing show today with Jose Vladimir Lopez.
Thank you for having me.
It's
a pleasure. It was fun.
It's been phenomenal. I got now education on many different levels, and I appreciate it so much. I know our viewers are going to appreciate this. And as this gets replayed over and over and over by many people, they're going to have friends, they're going to have family, people they know that who have not had a chance to buy a house, even knew they had the opportunity to buy a house, right? And there's people who've been working for years, who are line cooks, chefs, waiters, waitresses, bartenders, anybody who's self-employed, who's always been told, yeah, you can't get a mortgage. The door just opened up. And the fact of those people who could be American citizens or somebody who's coming into this country, going through the process and has been working here, paying their taxes, now has the opportunity to buy a house.
They can do it. The only thing I can tell you, if you're going to wrap up real quick, is be in your employment or your business for a minimum of 2 years. Make sure it is fully documented. Make sure that you have the funds, the minimum requirement, 20% down payment to 25% plus closing costs, and make sure that your credit score is in great shape.
So Dave, keep me for more than 2 years.
Jonathan, I'm trying to keep you a lifetime, Jonathan.
We will keep you for 2 years, buddy.
Absolutely. We're going to go to the spinning wheel, and we're going to talk about the newest winner of a beautiful Team Powerhouse tumbler. And I'm excited to share with you this because it means a lot to me to share this with you. If you win, I'm excited to send one to you. If you win, that means you're watching, you're on our TikTok. Again, please go to our TikTok station, Team Powerhouse Sales.
Yes, we need more followers.
YouTube, Team Powerhouse Real Estate.
We need more subscribers.
Please subscribe. Facebook, please follow me personally, David Lemel, Lemel. Go to our Instagram page. I have 2 places. One is the team page, which is more important, which is Team Powerhouse Real Estate, the official page. You can also follow me personally at David Lemel on Instagram. Thank you so much. Let's get on this wheel. Let's see who's my lucky winner today. I'll have some fun. And thank you so much for being so great.
All right, so we're going to spin the picker wheel. All right, who is on the wheel? We got new people, so let's just get right to it. Hopefully one of your family members isn't the winner this time.
I'm so grateful that they're even watching.
Oh, gosh, you're never going to guess who this is. It's the person who keeps harassing us.
Patrick Pagano, the winner of the. Now, this is not rigged. You know, I've had a lot.
Patrick, you're the winner. Can you give us your live reaction?
Hold on. The crazy part is, I've got friends, we got clients, and every time on Facebook or Instagram, they're like, "This is rigged. I never win. You know, I never win. I'm always watching." And I'm like, "Listen, this wheel spins around and around, and whatever happens."
That's still funny.
Wow, Pat Pagano, the winner of the tumbler. Am I excited for you, buddy?
Cheers.
Cheers.
Very happy for you, Pat.
All right.
Very, very happy for you, Pat.
Thank you, everybody. Instagram, YouTube, Twitch, all of our social media outlets, TikTok. Please follow us. You're going to see live videos of new homes coming on the market. We want your attention. We want your ideas, feelings. And if there's something you want to hear about on our Team Powerhouse podcast, please don't hesitate to ask. We'll bring them on there. We have a couple exciting guests coming on in October and in November. I will tell you, we're going to do a special show at the end of October. That's going to be, the people who follow haunted houses. We're going to have a special guest here talking about haunted houses. You know, you're about buying a house that's maybe haunted or something. We'll have that kind of a person on here on the show talking about that. But anyway, thank you very much again.
Thank you for
having me. It was awesome.
I really appreciate it.
Absolutely.